Good evening, guys. Bennett here bringing you the subscriber video update for Friday, May 17th, 2019. Hope everybody's having a good day. Market recovery continues into the expected kind of C wave of this overall higher degree B wave corrective move to the upside. Taking a look at individual sector movement on the day, still feeling a bit defensive. Real estate, utilities, financials are back in the green today, being down just over 0.75% on the session yesterday. Energy, so still seeing some defensive positioning. Trin also indicative of still some selling and institutional liquidation into this recovery effort. And you can see we did have a bit of an algo sell program go off towards the end of the session. Again, volatility continues to contract back under the 16 handle, closing under 15.5. So pretty decent day, pretty decent tape. Gold is back under 1290 now, and you can see crude oil back over 63. So let's go ahead and take a quick look at that. This wave 4 of the minor degree here did kind of sustain price action over the 60 handle, kind of a big area here for crude oil, and this is within an appropriate time zone when compared to wave 2 of the same degree. At this point, we are expecting a rally back towards 65, which will complete this overall three-wave corrective move and give us more of an indication as to what the higher degree pattern currently is. Nice move up in the dollar. You can see kind of continues to hold this potential wave 2 zone. I love that the 61.8% retracement was kind of our key zone of support within this corrective move, and this is still a very likely interpretation of this entire sequence. Okay, we really need to get over and continue to hold the higher degrees 61.8% retracement, however, to really see this move trade out. Gold, love to see the fact that we're backing off, and this is still a potential valid interpretation that we're doing some sort of 1-2 situation. We could even make the argument that this wave 2 is not complete, and this is just simply A of 2, B of 2, and this is we're working some sort of C of 2, which would still put us, in an appropriate zone here. Once we actually have confirmation of a bit of a breakdown here, then we can kind of more accurately forecast what could be a pretty substantial wave 3 decline there. All right, so we took a look at gold, oil, the dollar. Let's go ahead and move on to the S&P 500. And I want to take a look. Actually, we'll cover crypto really quickly. So Bitcoin back under 8,000 and still in line with what I feel is going to be this wave 4 correction setting in. Okay. As far as positioning for longer term growth opportunities within Bitcoin, I think the most appropriate course of action here, for those of you who have yet to take a position and are looking to perhaps hold for a longer period of time, I wouldn't be chasing this move. I would not be chasing this move for a couple of reasons. Not only are we going to kind of set back here in some sort of a wave 4, we have no clue what this pattern will be as of yet. That's going to eventually resolve into a move higher, but once this entire 5-wave move comes to completion, that then creates a wave 1 of a higher degree. That's when everybody who kind of got in here early is going to begin taking profits, perhaps questioning the potential, and you'll start to see a larger correction unfold. So if we were to theoretically retest 10.5 here in this wave 5 of this extended Elliott wave trend channel, which we really still don't have established because we're lacking a wave 4 zone, let's go ahead and just bring in a theoretical 5v1 with this wave 3 being the longest. So it is possible that we do see a move, back towards the upper end of that channel. So if this, in fact, theoretically ends up being the completion of this 5-wave move, and we set into some sort of a three-wave correction, likely a zigzag of sorts. That would then take us, a 50% retracement would take us to the area of the previous fourth, okay? So if you even were to buy into this low, yeah, you're going to see upside, but then you're going to see this move, which could go beyond area of the previous fourth. We could even go and retest 5,000 on this move, okay? Then the larger wave 3 will set in. That's the wave 3 that I want to look to position for, that I think will take us back towards the previous all-time highs for Bitcoin, okay? Ethereum, love it, love it, love it. Hit our targets in that blue wave 3. And very unlikely that the bear count is in play. Okay. At this point, would not be surprised to see orange minute degree wave 3 targets of a 200% extension of this orange wave 1. All right. And again, the same situation is at play here. Once the entirety of this 5-wave move completes, we'll set in to a higher degree wave 1, then retrace, in a longer corrective move. All right, so let's talk the markets and kind of where I see the Dow versus the S&P versus the Russell 2000. Okay, so I still think we are contained within this B wave correction, and if I were to bring in an instrument overlay and give you a comparison to the Russell 2000, you will see we have a pretty decent correlation between the Dow Jones and the Russell 2000. And the interesting thing about both of these charts are they have both, unlike the S&P and the Nasdaq, given us an appropriate or a more appropriate corrective pattern following their completed 5-wave advances. Okay. So even if we bring in a time analysis of so we're coming into a 1618, completely appropriate. So what I see here from a smaller degree standpoint is this. We put in 3 down, we put in 3 up, we have a nice 5-wave move within C of B. B took us to about a 1272, which is very appropriate for what's a 335 corrective pattern, also known as an irregular flat, where your B wave actually exceeds the high of the origin of the correction. And now we're working some sort of a 5-wave decline here. Now, this could prove to be a bit more substantial than anticipated. This could take us kind of beyond these levels. But this is the major support zone that I'm currently targeting in the Dow. In the Russell 2000, telling a very similar story here in that I still feel we are within some sort of a B wave correction. Okay. These are actually more appropriately looked at as complex moves within there, but I do think we're working some sort of a 3 or 5 wave decline to complete this pattern, and getting off of the daily, taking you down to the 1-hour chart. We're putting in some sort of a retracement. We don't have a very clear impulse or even a diagonal at play here. Let's see here. We'll work this one together. You can kind of it's hard to make the argument that that's a 5-wave move. So let's just turn this overall correction into combinations, okay? Because this is significantly more appropriate. This breaks down right here as a nice 5-wave move. Couple of valid options here. We can look at this as a 5. We could look at this as a B wave, even a B wave triangle. And then this another 1, 2, 3. Yeah, another 3-wave move here. Alright, so now that we've got the internals worked out a bit here, we can simply look at this overall move as I don't like the fact that the X wave broke to new highs. I think it would be more appropriate to just look at this, you know, on a higher time frame as a flat. And that won't be, we won't know until we either get 5 down here or 3 down. Okay. More importantly, we have this B wave zone of support to be really watching. Okay. So the Russell 2000 and the Dow Jones are showing some pretty strong correlation between one another. We also have, let's go look at the S&P, and let's look at our primary account here. So looking at this on the daily, I still think the triangle interpretation is the most appropriate. And getting down to the 1-hour chart, we can take a little bit better of a look at the expected B wave in the S&P. So let's go all the way down to a 10-minute chart because I want to really kind of get in detail on this one. We talked about the fact that both of these 5-wave moves are supported by their Elliott wave trend channels. What I mean by that is you can typically take a trend line from the completion of 2 and 4, project a parallel channel across the completion of 3. That will usually give you your wave 5 target. And in this case, it did provide the completion to that blue degree wave 5. We can then apply this same practice to the higher degree sequence of 2 and 4, project that over 3, and that also offered us the completion of 5. And now I see this overall B wave. It's a bit of a complex move. What I love about this B wave, though, thus far, is got a nice 3-wave move, another 3-wave move, 5 here, B wave, C wave. The C wave equality of A, look where the market got shut down today. Right at equality of C and A within this correction, and right at a 61.8% overall retracement of this decline. Okay, so a 61.8% Fibonacci retracement of this decline, very common fib level corrective target when working either a B or a wave 2. Okay, so this is simply giving us a nice expanding kind of period of volatility. Okay, I don't think this is over. I do not think this was the entirety of the correction, and then we are going to simply move higher. Could be proven wrong, but this is the most appropriate and valid interpretation. So this would give us a move back to potentially 2,800 is our initial target, kind of down to 2,800, fill this gap. So fill the gap into 2,800, which is about a 61.8% extension of A. And Oops. And unfold in some sort of a 5-wave move, very similar to what we saw here. Okay, so we could potentially be looking at the start of this corrective move tomorrow. Tomorrow, potentially Monday. Those are the 2 days that I'm looking to really target to get some exposure into this next leg lower. Getting back to the daily, I want to go ahead and do the same exercise we did with the Russell and the Dow. We'll do an instrument overlay. We're going to go ahead and overlay the NASDAQ 100. And you can see a very strong correlation between these two particular charts. What I like about this is they're both giving us kind of a similar 5-3 setting up for another decline and then be ready to move higher. There is something a bit interesting and a bit more bearish about the NASDAQ. Let's go ahead and take a look at the NASDAQ right now. So it is a bit concerning. Let's see, where do we go here? It is a bit concerning that from an Elliott wave perspective, you can count a valid 5-wave move, some sort of a 3-wave correction. This doesn't break well as a 5, okay? It can be done. Don't care for it, but it can be done. These are a bit strange, but what's a bit bearish about this is this 61.8% extension of this move projected from this low. It's kind of where we got shut down. Okay, I don't think this is where we stand. I really don't think we're getting ready to roll over in a much more significant and impulsive fashion. Okay, so I am still going to operate under the idea that we've got another move yet to come. Okay, which would match up more appropriately with the S&P, the Dow and the Russell, in that we do have one last push to go. All right, getting off the daily, getting you down to a 10-minute chart, and we can see we kind of have a similar situation going on here. 5 down. There is one thing I don't care for about it. We did have overlap between this 4, kind of invalidating that idea, but I'm going to go ahead and allow for an exception. There are times in which you just simply have to allow for exceptions, especially when you have such a narrow amount of overlap. Okay, very small window of overlap within that corrective move, because you still do have corrections that square up well with one another. 38.2% retracement here. This darn near matches perfectly to the correction here. But more importantly, off the lows, I want to point this out as it matches up just so beautifully to the S&P. 3 waves up, 3 down, another 3 up, and equality of C and A is where the market shut down today, which happens to line up quite well with an overall 61.8% retracement. So getting back to the daily, I do think that we are going to either tomorrow or early next week set into a more significant decline. Notice this would kind of take us back to actually I'm off on this one. I was going to say the area of the previous 4th, but that's of two lower degrees. But more importantly, this matches up very well with the S&P, and I do think that given this internal count here on the 10-minute for the S&P and the NASDAQ 100, that we do have a very strong chance of moving lower. Okay, EEM starting to back off just a bit, still needs to really kind of confirm itself. Same with FXI. I was doing some work in the Forex market, taking a look at FXY, Japanese yen ETF, and kind of some interesting observations there. We'll get into that next week in the webinar. What else do we have? So let's go ahead and talk about some of the chart setups that I'm looking at to trade tomorrow, because I want to start taking advantage of some of this volatility. Wow. Huh. I was having some issues with let's try calling it manually. Finding some analysis files in MotiveWave. A bit frustrating here. Hold on. got to be kidding. Huh. Well, ladies and gentlemen, that's no fun. Trying one last thing here. Wow. Wow, that's bizarre. Okay, let's just recreate it. No big deal. Move on. All right, so off the lows, I do see this as potentially working some sort of an impulse. Okay. All right, so let's go ahead and take a look at this. All right, this doesn't really matter. I just need to get it out of the way. Okay, to give you an idea of what I'm looking at here, it's really frustrating that I can't access that analysis file. I got to do some troubleshooting here. Very similar to the indexes. Okay, so we put in nice little 5-wave move. Don't really care for this wave 3, but we do have a nice fib support, and we are working some sort of a correction off this move. Okay. Also lining up equality of C and A from this 61.8% retracement takes us right into what would be a very appropriate wave 2 correction zone. Okay, so I think this is something that will be a strong candidate to take advantage of a move back here on the half-day chart. Okay, so we're up against the half-day 50 moving average. This would give us a move basically back down to the 200. So once we get confirmation that this B wave correction is complete, I want to look to kind of take a position there, short in wave C. Disney, let's see, what did I just do? I got all kinds of bugs going on, guys, with Motive Wave today. So we outlined this wave 4, and we're still hanging out in here, guys. We've got quite some time to exist within this channel of price action. So, all right, so Amazon's looking good to take advantage of to the downside. Nvidia. So Nvidia posted earnings here after the close. Had to move up. Conference call started and it's selling back off. So I gotta listen to that conference call here in just a bit. But let's. We got to move back up to 171.98, which was kind of expected because if we're looking at this as an impulsive decline off the highs, we completed this wave 3 right into a 1618, and we were expecting a move basically 167 to 170 area. So this after hour spike, I'm going to look at this as wave 4, and I'm going to look for a move in 5 to take us under 156 tomorrow. If in fact the markets do start to break down, which we are expecting a near-term move, I mean, this could be an intraday move to 151. So this would be a great opportunity with Friday expiration positions to capture some downside momentum. So I'm really looking forward to what happens with NVIDIA. All right, guys, that's about it for this evening. That's where my head's at with the markets. I can't wait for this overall move to the downside to complete. We've been in a holding pattern. I've got to say, we've really been in a holding pattern for quite a while. I've absolutely been kind of gun shy in this zone in the markets, just because of how heavily dependent we've been on trade headlines and just overall risk. A lot of factors to take into consideration. So I didn't want to. Wasn't really interested in any positions in the past couple of weeks, and that's beginning to change. Okay, so I want to look to get short for the next move lower, and more importantly, once this correction completes, that's when the next real trend move will unfold in the markets, take us to new highs, and then we'll begin the move lower. Okay, so that's the game plan as it stands now. Look for positions in NVIDIA and Amazon tomorrow, and also potentially look for an SPX position. So hope you guys are enjoying the evening. Any questions, comments, or concerns, please feel free to reach out to me directly, and I'll see you guys tomorrow. Take care. Cheers.